Okay, let's jump straight into today's explainer. I'm your host, joined as always by our incredibly cute market mascot, Loro, and today we're diving right into the numbers. Against all odds, the KOSPI closed up today, recovering 0.68% to hit 6,742.74.
But we need to immediately break down the structural reasons behind this unexpected bounce. So, what exactly happened? Why did the Korean market suddenly turn green while the rest of the tech world was seeing red?
Here is our rapid-fire market autopsy for the day. We're covering the KOSPI defying the tech slump, the macro forces in yields and oil, the Samsung buyback ceiling, surging nuclear stocks, and finally the NVIDIA earnings cannery. Let's kick things off with Section 1, the KOSPI defies the tech slump. Now, despite a pretty brutal 2.7% drop in the U.S. SOX Semiconductor Index, which was mostly driven by some serious AI revenue uncertainty, the KOSPI actually fought back. It opened low, sure, but it relentlessly clawed its way up to close positive. It completely absorbed that offshore shock. And this recovery was undeniably broad-based. We saw 647 constituent stocks in the green against only 226 falling. Buyers were confidently stepping up across the board today. Market breadth expanded significantly. Mid-cap stocks rose 1.4% and small caps climbed 1.5%. So this widespread bottom-up buying largely offset that massive wave of foreign selling at the very top of the index. Moving right along to Section 2, macro forces, specifically yields and oil. What we saw here was basically a giant macro domino effect. First, a second day of oil price declines pushed WTI crude down to $83.91. That instantly lowered Korean energy import costs. Then, that reduced inflation pressure dragged the Korean 10-year bond yield down by 1.6 basis points. Ultimately, that lowered the equity discount rate, and as we know, cheaper capital pushes equity valuations up. All right, Section 3, the Samsung buyback ceiling. Let's look at the micro-level catalysts. Yesterday was, well, absolutely brutal. Samsung fell 8.7% on some severe disappointment over its 90 to 110 trillion won shareholder return plan. But today, the bleeding completely stopped and the stock closed exactly flat. So why the huge disappointment yesterday? It actually comes down to the Financial Industry Structure Improvement Act. Because Samsung Life and Samsung Fire are sitting right near that 10% ownership limit, any massive share cancellation, well, it mathematically forces them to sell shares just to stay legal. This structural ceiling naturally caps the actual, real-world scale of the buyback. But the panic actually halted today. Short-selling turnover in Samsung Electronics completely crashed from 1.02 trillion won down to just 379.5 billion won. The bears are pulling back, which signals significantly fewer trades betting on a further decline. Meanwhile, in the semiconductor battlefield between Samsung and SK Hynix, it was like a massive tug of war. Foreign investors dumped 3.58 trillion won in memory stocks, while retail investors relentlessly scooped up 1.58 trillion won of those exact same shares. It was a seriously dramatic transfer of risk. Let's pivot to Section 4, nuclear power sector surges. So reports broke indicating that the U.S. government actually asked South Korea to acquire a stake in Westinghouse. This instantly injected some aggressive momentum into domestic companies holding heavy nuclear construction experience, like Doosan Enerbility. With the U.S. explicitly targeting 10 new large reactors by 2030, the market reaction was just explosive. Hyundai ENC spiked 14.87%, Daewoo ENC jumped 11.80%, and KEPCO ENC skyrocketed an absolutely massive 20.27%. Institutional capital ruthlessly rotated right into this thesis. They net bought 123.8 billion won in the machinery sector alone. That pushed Doosan Enerbility up 10.55% purely on the expectations of massive new reactor vessel orders down the pipeline. And finally, Section 5, the NVIDIA earnings canary. Let's talk global AI demand. This right here is literally the billion-dollar question, because Samsung and SK Hynix both supply high-bandwidth memory, or HBM, to NVIDIA. Tomorrow's NVIDIA earnings report is going to serve as the absolute canary in the coal mine for global AI accelerator demand. It's going to set the tone for the entire memory sector.
The data dictates the next move, and the entire market is basically holding its breath right now in Yaoido and beyond. We've seen incredible domestic resilience today, from Samsung's halted bleeding to that wild nuclear sector explosion. But the ultimate question remains, will NVIDIA's upcoming earnings actually justify the massive AI hype, or is today's KOSPI recovery just the calm before the storm? Thank you for joining today's Explainer, and be sure to subscribe so you don't miss the next market wave.